guys, welcome to Unisys Weekly Fundamental Analysis. First of all, as usual, let's look at the dollar. So following Biden's US $1.9 trillion, okay, anti-epidemic relief measures, the $2 trillion economic plan is now on the scene again. But the plan is expected to trigger a bipartisan struggle in the US Congress. Members of Congress have divided opinions on the scale of the plan and the inclusion of projects traditionally considered social services. However, this plan has stimulated optimism about the prospects of the US economy, and the US economy data has improved, as well as the US bond yields have continued to rise, giving the dollar a good support. The US dollar index hit a new high in nearly 5 months this week. So the foreign exchange market position data show that the overall trend of increasing bullishness in the US dollar remains solid. Hedge funds have reduced their overall short dollars bets to the lowest level since June 2020, while increasing their bearish bets on the yen. And next, let's look at the euro. So many European countries have been dragged down by the third wave of the COVID-19 epidemic. The AstraZeneca's vaccine safety and vaccine supply problems have made the progress of the COVID-19 vaccines significantly lagging behind. Recently, Germany and France have introduced more stringent anti-epidemic restrictions. The short-term economic prospects of the district are under pressure. Next, the gloomy economy outlook and the widening gap between the yields of US and German government bonds have kept the euro exchange rate low. The euro hit 1.1704 against the dollar, which is the lowest since the 5th of November. And also the euro hit a 13-month low to 1.8493 against the pound. Next, let's look at the pound. A series of economic data released this week provided support for the pound. Although the dollar rose this week, the pound rose 0.3% against the dollar this week. And this month, the market rose out of the market. So, in the 21 years since 2000, the performance of the British pound against the US dollar in April has been up for 17 years, which is 81%. A very high percentage, because the flow of funds at the beginning of the UK fiscal year is usually positive. Although seasonal factors should not be considered in isolation, they can be still a useful tool when combined with other factors. And lastly, let's look at gold. So in the past week, spot gold fell first and then rose. Optimistic economic data from many countries around the world further boosted the prospects for economic recovery and suppressed the safe haven demand for gold. The yields of the US dollar and US bonds rose, and the price of gold fell to nearly 9 months low. So near the low point, but a strong support near 1676 attracted bargain hunters to re-enter the market. And also Biden's 2.25 trillion stimulus plan also raised the inflation expectations. So when the dollar and the US bond yields adjusted, the gold price launched a counterattack and recovered in one fell swoop. Most of the decline closed at $1729.31 per ounce, a weekly decline of only 0.19%. So for the market outlook, professional investors and analysts have rebounded bullish sentiment, but the expectations of retail investors are still quite different. They have different opinion on this. And also, let's look at the upcoming Forex calendar. So as usual, for traders who are going to trade whenever there's news, please set your stop loss, as the fluctuation will be high. Alright, so that's all for today. Thanks for watching.